Since our selection of the Applovin stock, the stock has exploded in value over the course of 1 year. My own position has also performed well. It is currently at a plus 600% return with a profit of 17,000 euros. The current position has grown to 20,000 euros. I bought more after my initial position because otherwise the return would have been even higher. So it was a good move to buy more of the winner. However, nowadays I think that the Applovin has gone very quickly and that the stock is overvalued. While it does have a lot of potential and will continue to have it, first of all, we have shared this in our community, Happy Investors, where you can also gain access. You can subscribe to our analyses. That is a very important point. And that is why I made this video. Buy signals and also ETF alerts with buy and sell signals, all with monthly updates of top stocks and top ETFs, and that for just $99 per year per analysis. I will just briefly show it. We presented Applovin as a recommendation in December 2023. However, there are significant differences between the current valuation and the present valuation. At this moment, during our analysis, we also mentioned that the explosion had already increased by 330%, but it still lagged behind the S&P 500. We have acknowledged that it is a high risk, and the total analysis is, as always, extensive with a lot of research into the quality of the company and fundamentals. But crucial to this story is that when we established the market value of Applovin, it was 14 billion. The insider ownership was, by the way, very high, which was also the reason for us to select Applovin as a potentially good long-term stock. At that time, the current price-earnings ratio was 155, and it was expected that for 2024, which we are now in a year later, it would come out around 25 to 20, and that would have been acceptable. And that also amounts to a luck ratio of 0.7, and that luck ratio is crucial because it takes into account the future EPS growth. Also, the price-to-sales ratio was at that time still acceptable between 5 and 4. To give you an example, Applovin currently has a luck ratio of 2.5, so significantly higher than when we established Applovin as a potential growth stock. You also see that the price-to-earnings ratio of 80 is really on the high side, and the price-to-sales ratio has quickly increased to 25. The company is growing very fast, but you want to buy with a margin of safety, and when the opportunities are predominantly in your favor, and in my opinion, the opportunities for Applovin are not in our favor at the moment. So my current position of 20,000, I will hold on for a while, and I will explain to you in this video why. However, I would absolutely not buy more at this moment, simply because the opportunities seem to be more against us due to the high valuation. From Morningstar, the stock does not appear to be thoroughly researched. The fair value S&M is still estimated at $60, while the current price is $340, a huge difference. They have already established that Apple or Wing has an economic moat. A small one, but it is an economic moat. You want to compare Apple or Wing with, for example, D2 Desk, but it is an interesting company and they have really grown rapidly. Also thanks to a very interesting acquisition strategy. So that's why our eye fell on this potentially valuable company, and it has proven to be quite valuable. I think that is a very important topic, because I think it is very important to be quite pessimistic from their side, and there are very few analysts who often give a sell rating. So always keep in mind to take this with a grain of salt. And of course, you should also take our analyses with a grain of salt. The best thing is to conduct your own analyses. The Eversprite Stargart is estimated by analysts at 200, which is also significantly lower than the current price. That is what analysts think. Also, when you look at historical valuation, we use fast grabs for that, but you can't draw any conclusions from it. You can't say anything about Applovin from a historical perspective because the price has exploded in a very short time, going from unprofitable to profitable very quickly. You also see that the EPS was 1 at the end of 2023, and the EPS in 2024 is estimated at 4, so that's 4 times. So it is justified that the stock is rising so quickly, but the increase does seem very extreme. Also, based on forecasting, you can't say anything useful at this moment about where the stock is headed, except that, at least in both the short and near future of the next 3 to 5 years, considering the bad luck ratio of 2.5, the stock seems to be overvalued. But it could very well be that the stock declines further. Based on the valuation we have already discussed, yes, at least in the short term, the valuation is really super high. The factor analysis results in a hold, but that is actually a kind of glitch in the system. We have been using factor analysis for years, so I know how it works. And this is because the value-based is actually super high, while other factors are very favorable. Strong growth, profitability, momentum, revisions. So the algorithm has problems here in giving an adequate rating to the app promise, precisely because it is such an extreme outlier within the model. The growth still seems interesting with an EBITDA growth of 46% for next year, and that is interesting, only we have already seen that the EPS or the bad luck ratio is 2.5, and that is even based on an EPS long-term growth estimated at 25% per year for the next 3 to 5 years. You can easily imagine that the EPS may turn out lower in the short term, and there only need to be 2 quarters in which bad news is presented. For example, if the revenue is slightly slower than expected, and if that happens, the share will really be corrected very quickly. No one knows for sure. And that is always the problem with investing. In the past, I have too often sold very large winners, and then you have to buy back, and then you will just see you potentially buy at the peak, and it is down 30%. So I don't want to sell my winners too much anymore. That is always something that is said. However, in practice, that is more difficult than the theory, simply because sometimes, just like in the case of Applovin, the valuations rise very high. Applovin was still unprofitable last year, 2023, and now, in 2024, we suddenly realize, out of nowhere, a few quarters later, a net profit margin of over 25%, extreme. And that return on equity is therefore also super high. In our analysis, provided in our community, which you can join, we also explained why Applovin could rise so quickly, and that as the basis of the strategy, namely an acquisition strategy. Very interesting, and definitely take a look at the company, at the history of the company, what they have all done. Regarding Zexrank, which looks at the very short term, indicates a strong buy. However, I want to warn here that although they give a price target of $370, these kinds of reports from Zexrank and other analysts actually contribute to those market bubbles. Because in the short term, Applovin indeed seems to be a strong momentum company with enormous extreme growth. However, this price target is for the short term and not for the long term. I personally think that the stock has risen a bit too quickly, with now a market value of so that is a very important point, and that is also an important point to know. Ratios are really very high, such as the price to sales ratio. When we bought the stock somewhere on December 23rd, I can't grab that anymore, but let's take December 26 as a reference. And the stock has risen by 700%, or x8, so 1,000 euros has become worth 8,000 euros. Well, our subscription costs 99 euros per year, so you would have a payback period of 1 year. I don't even know how much. I think you would have recouped it within a week. It can go that fast with the right selections, but of course there are also losers. But what is the case with Applovin now? It has already dropped a lot at one point, even corrected by almost 90%. Now it has risen a lot, so you can see how volatile the market can be. And then everyone wants to claim that the market is efficient. Well, that is not the case in all instances, so I know that case. What do you often see after a huge increase? Then there is an accelerated increase based on quarterly figures, and often in technical analysis, you see that it could still rise a bit more for a while. However, when the price corrects a bit, you get these kinds of patterns. And if a second peak is established and we see that a resistance level arises there purely from technical analysis, then the stock could drop significantly. And why do I think it is relevant to use technical analysis now? Because the stock is likely overvalued. And in the short term, you often see with overvalued or undervalued stocks that technical analysis is indeed a useful tool to determine your entry or exit position, at least in the short term. If you want to know when I sell Apple Unloving, follow and subscribe to our channel or join our community, and you'll receive our training alerts as a bonus. Thank you for watching, and I am curious to see what Apple Unloving will do in the coming period.